Gold prices dramatically lower this week as we saw gold drip below 1,300. Pretty much the lowest prices we've seen going back to late January. A lot of news out there, a lot of hope, I guess, and optimism in the market. But ultimately, it became a technical trade over the last two sessions when we saw Treasury yields spike higher after we got the stronger GDP number, after possibly some more of a hawkish tone from the Fed chair, and likewise some stronger data and maybe some optimism out of China. Not quite sure if that's helping or not, but the dollar is very strong, and we saw a big move lower really over at the end of this week, taking us down to 1,300 and just below. So that's significant considering not too long ago we were talking about 1,350 and beyond. So right now a bit of a pullback. Some will call it a buying opportunity, but it looks to me more like these are exits. Longs getting out, waiting for a better opportunity to buy than what we're seeing now. And if you look at the dollar, as I mentioned a moment ago, yes, the dollar seems very strong. We've had mixed data, but we have had stronger data from a macro perspective, GDP being the big one. Likewise, I think the Fed, while the market's telling you there isn't really much hope of many or any rate hikes in 2019, I think that the Fed wants to leave the option on the board, and they make a good argument. So right now you've got the dollar sort of catching a bid. It's not where it was, say, a month ago, but it's starting to retrace. It stopped going down, and it started to retrace those levels. So dollar looks stronger. It's certainly not where we think it probably would be if the Fed were to actually raise rates. But if you look at the Treasury side, you've got yields going much higher. It's taking away from some of the luster, but certainly adding to the dollar bid. And right now, I think the dollar, when you have upcoming events like Brexit that are affecting both the UK and the European Union, you've got those two currencies right now kind of fighting each other, but the dollar seems very strong, which is adversely affecting gold at this point. So strong dollar, weaker gold. As we end February and head into March, we are almost caught up on our positioning from the CFTC, from the government shutdown. You know, our latest tidbit of news takes us to the middle of February. We saw speculators kind of holding steady. I think that we're missing 1 week in there, which shows a big increase in the longs. I think all those longs got out this week, so they're kind of waiting, taking a step back. I think there will be speculators that step in to buy ahead of Brexit, but I think that the profit taking we've seen here has been pretty fierce, and that's what's pushed us lower, along with the stronger dollar, more positive data, higher Treasury yields, making it more attractive to go elsewhere. And likewise, risk assets have just taken off. So I think that right now we could see speculators jump back in, but they're going to wait and see how low this can go. And right now, gold prices at 1,300-ish area could have some downside to them. We could see a break as low as 1,280, and that would probably be the next big buying area, unless we see some kind of catalyst news, a fundamental event that turns things around. So right now, while from a longer term perspective, I'm still very bullish gold, I think there could be some buying opportunities at lower levels, given what we're seeing now from the Fed, given what we're seeing from the U.S. data, and the possibility of optimism in the global marketplace, something we haven't really had in quite a bit. But the Brexit will continue to, I think, rule most traders. So you'll see risk coming off the table in the next few weeks. Gold will be a beneficiary of that move.